So that's where the markets start off from for today, which is the first official trading day in the month of October. Eronmosele, Aziba, investment analyst with AfriInvest, joins me now to tee off market expectations for October. Good morning to you, Eronmosele.
Good morning, Harry.
Well, today is the first trading day of October. What are you expecting? Let's start with the fixed income segment of the market.
Okay, thank you very much for that. Just like we noticed in the last month, September, which just ended, we saw average yields across instruments rise about 0.6% to settle at about 17.6%. This is on the back of increased interest by investors in the shorter end of the fixed income market, and it's also broadly driven by the higher inflation numbers that we've been seeing. So in order to mitigate any in order to ensure real returns on investment, we've seen yields consistently rise all through the month, and in October also we expect this to continue. Next week about 100, this week about 137 billion naira worth of T-bills will be auctioned, and we expect to see the high stock rates that we have seen in the past auctions, which have ranged between about 17% and 20%. So just to, in a nutshell, we expect yields to continue to rise at this end of the market.
Well, for the currencies markets, let's talk about it a little bit. The CBN still remains the major supplier to the interbank foreign exchange market, which many expect will likely continue, including continued pressure on the naira, which we've seen in the last couple of trading sessions. Give us your thoughts. How do you expect that market to look? Are you also of the view that we'll continue to see pressure on the naira in the coming days, particularly for the month of October?
Well, given that we still have the issues surrounding FX liquidity right there in the market, there's still an increasing likelihood that we'll see the pressures on the domestic currency, especially at the parallel market end. We expect these pressures to continue to mount, as currently, as last week we had the naira trading about 490 naira to the dollar in that market, and there's every likelihood that this would even worsen in the month. Currently, the CBN still remains the major supplier of FX to the market, and in a bid to sort of stabilize the market or sort of control the price movement, we've seen the rate of intervention by the CBN actually increase in the previous month. So we expect this to continue as pressures continue to mount on the on the FX market.
Well, very soon, companies listed on the Nigerian Stock Exchange will begin to release their third quarter earnings. What are your expectations?
Well, it's similar to what we had in Q2 2016. We haven't really had any major improvements in terms of macroeconomic conditions, so we expect this to continue to weigh on companies' earnings in the period. I mean, following the introduction of some flexibility in the FX market, we saw the impact it had on banking results, especially for the tier 1 banks, which recorded gains in forex revaluation gains, and we expect this to also be the major driver of earnings in Q3 2016 for those banking stocks. But across all the other sectors, we don't really expect to see any major improvement in terms of what the results look like. Any major improvement from what we noticed in Q2 2016, which was broadly weak.
Okay, so we've got our eyes on those ones as well. But barring any unexpected shakeups at the market, do you think this will be an October to remember for the markets?
Well, we can only hope for the best. I mean, it's quite certain that without any major trigger to stoke investors' confidence, the only major driver of market performance would still remain Q3 2016 results. So, well, I mean, in September, we had the market up about 2.7%, majorly driven by investors taking position in oil and gas oil and gas stocks. Presently, we believe this might have reached its peak, so we might start to see some sell-offs in trading sessions ahead. So for our outlook for October remains slightly bearish. We aren't too optimistic on the outlook for the market in the month.
So, Eronmosele, do you expect only the oil and gas sector, oil and gas equities listed on Nigerian Stock Exchange, to show any remarkable improvement? How about the other ones? In what other segments are you expecting something different?
Well, like I already mentioned, in terms of the Q3 earnings that are going to be coming out, the improvements that we might notice might be in the tier one banks results. So we might also see some investors take position in these stocks that have declined significantly in the prior month. So this could also be another sector that would improve. But like I mentioned earlier, for the oil and gas sector, there's an increasing likelihood that we might actually start to see some profit taking by investors in the month, given that a lot of the counters listed in that space recorded massive gains within the month.
Well, thank you so much, Eronmosele, for joining me on the program, and of course, teeing off for us very nicely what we should be looking out for as the new month begins for the markets. Do enjoy your first trading day.
You too, Harriet.